Hi everyone. They say the loudest moves are made in absolute silence. While the world was distracted by noise, headlines, and fleeting trends, a shadow passed over the global markets, a shift so massive yet so quiet that almost everyone missed it. 660 tons. That isn't just a number on a spreadsheet, it is a signal flare. Beijing has made its move. The giant is hoarding the one asset that makes the modern world run. The question isn't why they're doing it, the question is, why aren't you? Welcome to the wake-up call. You are here because you sense something. You feel the vibration in the ground that says the old rules of money are changing. We are living through a history-making pivot, and at the center of it is silver. Not just a metal, but a mirror reflecting the truth of our economy. You see, most people chase wealth by looking at what happened yesterday. They buy when the graph is green. They sell when the graph is red. But the masters of industry, the architects of empires, they look at what is essential. They look at what is finite. Consider the mindset of the strategist. When a nation like China imports 660 tons of silver in a short window, surpassing all expectations, they aren't gambling. They are securing the future. They know that silver is the electric vein of the 21st century. It is in every solar panel, turning sunlight into power. It is in the microchips driving the AI revolution. It is in the electric vehicles claiming the roads. They are buying it because they know the world is about to run out of it. And this is where your story begins. Think of the last time you missed an opportunity. That moment when you hesitated and the door closed. We often think wealth is about luck, but wealth is actually about vision. It is about standing on the shore and seeing the tsunami before the water even pulls back. Silver is currently the most undervalued asset on the planet relative to its utility. It is a coiled spring. But holding silver isn't just about profit. It is about character. It takes a different kind of person to trade paper promises for real weight. I want you to imagine a man named Thomas. Thomas wasn't a billionaire. He was a carpenter. For 20 years, while his friends bought new cars on credit and chased the latest tech stocks, Thomas took 10% of his income every month and bought silver coins. People laughed. They called it a dead rock. But Thomas understood one thing. Governments can print currency, but they cannot print silver. When the inflation hit, when the purchasing power of the dollar crumbled, Thomas didn't panic. He had built his own personal bank. That 660 tons moving into Beijing is just a macro version of Thomas. It is the realization that when the music stops, you need a chair that won't break. Are you building your chair, or are you still trusting the music? This is the secret that separates the wealthy from the working class. The wealthy accumulate assets that production depends on. If the world goes green, silver wins. If the world goes digital, silver wins. If the currency collapses, silver wins. It is the only asset that thrives in chaos and in progress. But you have to have the discipline to act when it feels boring. Real investing is boring. It is the slow, rhythmic breathing of a long-distance runner. It is buying when the price dips and smiling because you just got a discount on your freedom. Let's talk strategy. You don't need millions to start. That is the beauty of silver. It is the people's money. It is accessible. But you need a plan. Start treating your income not as money to be spent, but as fuel to be stored. Every ounce you buy is a vote for your own independence. It's a physical declaration that you control your labor, not the central banks. Look at the horizon. The industrial demand for silver is outpacing the mining supply. We are entering a deficit. The math is undeniable. Beijing sees it. That massive import number is them locking the doors before the storm. When the shortage hits the news, when the panic buying starts, it will be too late to get in at the ground floor. You're standing on the ground floor right now. The elevator doors are open. But this journey requires a shift in your identity. You must stop seeing yourself as a consumer and start seeing yourself as a custodian of wealth. A consumer sees a coin and asks, "What can I buy with this?" An investor sees a coin and asks, "What will this be worth when my children are grown?" That shift changes everything. It changes how you wake up in the morning. It changes how you work. It gives you a calm confidence because you are anchored in something real. Do not let the silence of this market fool you. The pressure is building. The smart money is moving into position. The 660 tons is just the first tremor. You have the knowledge now. You have the vision. The only variable left is your action. Will you watch history happen, or will you be part of the few who prepared for it? Take a breath. Feel the weight of the opportunity in your hands. It's heavy, isn't it? That is the weight of responsibility, and it is the weight of glory. Secure your future. Build your fortress, ounce by ounce. Let's look closer at the sheer physical reality of 660 tons. It is difficult for the human mind to truly grasp the weight of that. Imagine a fleet of heavy-duty armored trucks, lined up bumper to bumper, their axles groaning under the strain of pure white metal. This is not a rounding error in a ledger, nor is it a seasonal adjustment. It is a mountain being moved from one side of the world to the other. When a superpower makes a move of this magnitude, they do not do it on a whim. They do it because they understand the life cycle of empires. Throughout history, whenever the dominant currency begins to wobble, whenever the debt clocks spin too fast to ever be paid back, the oldest nations on earth retreat to the oldest forms of safety. Beijing is reading the same economic tea leaves that you are, but they are acting on them with the force and speed of a sovereign state. They are effectively trading paper, digits on a screen, promises that can be diluted by a central bank's keystroke, for the one thing that cannot be forged, printed, or debased. This is the ultimate signal. In the financial world, we often talk about smart money. We look at what the billionaires are doing, what the insiders are buying. But there is a level above smart money. There is strategic money. This is money that thinks in decades, not fiscal quarters. When China accelerates its intake of silver, they aren't trying to flip it for a quick profit next Tuesday. They are positioning themselves for a future where he who holds the physical resources holds the leverage. They know that silver is unique because it is dual purpose. It is a monetary shield against the collapsing value of fiat currency, but it is also a strategic industrial material necessary for high-tech dominance. By cornering the market now, quietly, without fanfare, they are securing the inputs for their factories and the backing for their wealth, simultaneously draining the global pool of available supply before the rest of the world wakes up to the scarcity. Most people are paralyzed by the noise of the daily news cycle, watching stock tickers that detach further and further from reality. Meanwhile, beneath the surface, the tectonic plates of the global economy are shifting. This 660-ton movement is the sound of the vault door closing. It serves as a leading indicator, a canary in the coal mine that has stopped singing to the tune of the dollar. It tells us that the era of unlimited paper wealth is meeting the hard wall of physical reality. The smart money is exiting the casino. They are cashing out their chips and buying the building. This massive accumulation suggests that the entities with the most data, the most analysts, and the longest timelines have lost faith in the stability of the current system and are voting with their wallets for tangible assets, forcing us to ask what they know that the average investor does not, and how long this window of opportunity will remain open before the price reflects this massive drain on inventory. To understand the true value of silver, you have to strip away the romance of coins and look at the physics of the universe. Silver is not merely a shiny metal found in a pirate's chest. It is the single most conductive element known to man, effectively the best carrier of electricity that exists in the natural world. In a civilization that is becoming entirely digitized and electrified, this property makes silver the non-negotiable DNA of the future. You cannot have a modern world without it. Gold is the metal of kings, sitting idly in vaults doing nothing but preserving value. But silver is the metal of the working class, sweating and laboring in the engines of progress every single second of the day. This creates a floor for its value that is based not on speculation, but on absolute necessity, because without silver, the lights go out, the screens go black, and the data stops flowing. Consider the green energy revolution, which is no longer a political talking point, but a global industrial mandate. The sun is the unlimited power source of the future, but we cannot harvest that power without silver paste. Every standard solar panel on a rooftop or in a massive desert farm relies on silver to conduct the electricity generated from sunlight. As nations race to meet carbon-neutral goals, they are inadvertently creating a massive, insatiable hunger for this metal. We are talking about billions of ounces needed to retrofit the world's energy grid. Scientists are trying to thrift it, to use less of it, but physics is stubborn, and to achieve maximum efficiency, silver remains the undisputed king. If you believe the world is moving toward renewable energy, you effectively have to believe in the bull case for silver, because the two are inextricably linked. Then you look at the automotive industry, which is undergoing its biggest transformation since the invention of the Model T. The shift from internal combustion engines to electric vehicles is a shift from steel and oil to copper and silver. An electric vehicle is essentially a supercomputer on wheels, and it requires up to 3 times as much silver as a traditional gas car. It is used in the battery management systems, the vast network of electrical contacts, the navigation screens, and the automated safety sensors. As the fleets of the world turn electric, millions of ounces are being devoured by the auto industry annually, and unlike gold, which is recycled and kept, much of this industrial silver is consumed in trace amounts that are too expensive to recycle, meaning it is gone forever. Beyond energy and transport, there's the explosion of the digital frontier. The AI revolution, the expansion of 5G networks, and the Internet of Things all run on hardware that demands speed and reliability. Silver is in the microchips, the solders, and the high-performance connectors that make artificial intelligence possible. It is the bridge between the digital code and the physical reality. We are building a world that demands instant processing power, and you cannot build the infrastructure of the 21st century with the materials of the 19th. This industrial indispensability creates a situation where the demand is inelastic. Manufacturers cannot simply stop buying silver when the price goes up, because their products will cease to function. forcing them to pay whatever price the market demands just to keep the assembly lines moving. We need to look at the ground beneath our feet and accept a hard truth about geology. It is not infinite. For centuries, humanity has been harvesting the low-hanging fruit, skimming the easy silver from the surface of the earth, but those days of abundance are fading into history. The mines are getting deeper, the rock is getting harder, and the amount of silver found in every ton of earth moved, what miners call the ore grade, is collapsing. We are now working harder, burning more diesel and using more water just to extract the same amount of metal we did 20 years ago. This is the law of diminishing returns playing out in real time, setting a hard physical cap on how much silver we can actually bring to market, regardless of how high the price climbs or how desperately the industrial sector screams for more supply. What most people do not realize, and what creates a dangerous fragility in the market, is that the majority of the world's silver does not come from primary silver mines. It comes as a byproduct of mining for lead, zinc, and copper. This is a critical structural flaw in the supply chain because it means silver supply is largely inelastic. If the price of silver doubles tomorrow, a copper miner cannot simply double their production to capture that profit because they would flood the market with copper, crashing their primary business and destroying their own margins. We are effectively handcuffed to the production cycles of base metals, leaving the silver market unable to react quickly to the explosion in demand. We are trying to fill a swimming pool with a garden hose that we cannot turn up, while simultaneously poking more holes in the bottom of the pool as industrial consumption accelerates. The math is relentless and unforgiving. For years, the market has masked this deficit by eating into above-ground stockpiles, quietly draining the vaults in London and New York that held the surplus of decades past. But those inventories are bleeding out, and we are watching the visible stocks on the exchanges dwindle to historic lows. Once that buffer is gone, there is no safety net left to catch the market. We are entering a period of structural deficit where consumption outstrips production year after year, a pattern that is not a temporary glitch in the logistics chain, but the fundamental imbalance between what humanity wants to build and what the earth is willing to yield. When you combine a stagnant, struggling supply chain with the voracious, exponential appetite of the green economy, you create a powder keg waiting for a spark. The industrial users, the tech giants, the solar manufacturers, the government contractors do not care about the spot price on a chart. They care about securing the physical metal to keep their doors open. When they realize the mines cannot keep up, they will bypass the paper markets and go directly to the source, sparking a bidding war for the physical crumbs that remain. We are walking blindly into a supply crunch that will rewrite the valuation of precious metals, forcing the world to reconcile the difference between the limitless printing of currency and the stubborn, finite reality of the periodic table, a collision that will inevitably result in a violent repricing as the market desperately tries to incentivize new production that simply is not there. In the world of professional investing, there is a holy grail that every hedge fund manager and billionaire seeks, but rarely finds, a concept known as asymmetric risk. It is the simple but powerful mathematical principle where the potential upside of an investment vastly outweighs the potential downside, a scenario where you're risking pennies to make dollars rather than flipping a coin where the outcome is even. Right now, silver represents the most glaring asymmetric opportunity in the global financial markets, because it is arguably the only asset class that has been left behind by the massive inflation of the last 40 years. If you look at the stock market, real estate, or the bond market, they are all trading at or near all-time highs, priced for perfection in a world that is far from perfect. They are bubbles inflated by cheap debt, and buying them now is like picking up pennies in front of a steamroller. But silver is an anomaly, a glitch in the matrix. It is currently trading at roughly half of its all-time high from 1980 and 2011, despite the fact that the money supply has expanded exponentially since then. This means that in real, inflation-adjusted terms, silver is on sale at a historic discount, effectively offering you the chance to buy a critical strategic resource for 1970s prices in the 2020s. This valuation gap creates a safety floor that does not exist in paper assets. If you buy a tech stock that is trading at 100 times its earnings and the market turns, that stock can fall 90% and still be expensive. But silver has a hard floor because it has a cost of production. It costs energy, labor, and machinery to pull an ounce of silver out of the ground. The price cannot stay below the cost of production for long, or the mines simply shut down, supply dries up, and the price spikes violently to find equilibrium. You are buying an asset that is trading near its cost of replacement, which provides a level of insurance against catastrophic loss that simply isn't found in the over-leveraged paper world. You are betting on a reversion to the mean, a natural law of markets that dictates that undervalued assets must eventually catch up to the reality of the economic environment. Furthermore, the silver market is incredibly small, almost microscopic compared to the ocean of capital sloshing around in stocks and bonds. This small size is what gives it such explosive potential. It takes a massive amount of money to move the S&P 500 or the housing market even a few percentage points, but the silver market is so tight that a relatively tiny amount of capital flowing in can cause the price to slingshot upward. We are talking about a market where, if even 1% of the capital currently invested in crypto or tech stocks decided to diversify into silver, there wouldn't be enough physical metal on the planet to satisfy the orders at current prices. The price would have to multiples just to balance the books. This is the definition of a coiled spring, an asset that has been compressed by sentiment and manipulation for decades, storing up potential energy that is waiting for a trigger to release. We are looking at a scenario where the downside is limited by the physical reality of mining costs, but the upside is technically uncapped because of the currency debasement and industrial desperation. It is a bet where the mathematics are heavily stacked in your favor, offering a rare window where the patient investor can position themselves ahead of the crowd before the inevitable repricing occurs and the asymmetry resolves itself in a vertical line on the chart. Finally, we arrive at the most critical transformation, which does not take place in the market, but within your own mind, demanding that you kill the identity of the consumer and give birth to the identity of the custodian. For generations, we have been programmed with a lie that says the path to safety is to work hard, save currency, and trust the system to protect our labor. But we are waking up to the heartbreaking reality that the modern saver is actually the loser, because they are trying to store their life force in a vessel that has a hole in the bottom. Every hour you work, every sacrifice you make, is converted into dollars or euros or yen that are being systematically diluted by governments addicted to debt, meaning that if you leave your wealth in the bank, you are not preserving it. You are watching it melt like an ice cube on a summer sidewalk. The custodian mindset rejects this silent theft and recognizes that true wealth must be anchored in something that cannot be printed into oblivion, something that respects the laws of physics rather than the whims of politicians. To be a custodian is to understand that you are not just an owner of things, but a steward of your family's future and a guardian of value that must be passed down like a torch in a relay race. When you take your paycheck, which is nothing more than a claim check on society, and you immediately convert a portion of it into silver, you are performing an act of rebellion and an act of love. You're opting out of the casino where the house always wins and building your own personal reserve, becoming your own central bank where you set the policy and you hold the keys. This shift changes the way you walk through the world because you're no longer chasing the next dopamine hit of a consumer purchase. Instead, you're playing a game of accumulation, finding satisfaction in the weight of the metal, knowing that every ounce you stack is a brick in a fortress that will stand long after the current fiat currencies have returned to their intrinsic value of zero. This is about breaking the chains of generational struggle. Most families lose their wealth within 3 generations because they pass down money without passing down the philosophy of money, but the custodian teaches their children that wealth is not what you spend, but what you keep and protect. By holding silver, you are holding a physical connection to the past and a ticket to the future, teaching yourself the discipline of delayed gratification in a world that demands everything instantly. It is a quiet confidence that comes from knowing that while the markets may crash, while the digital illusions may vanish, and while the paper promises may burn, you hold in your hands the very substance that has outlasted every empire, every dictator, and every currency collapse for 5,000 years. You are stepping into a lineage of wise men and women who understood that if you do not hold it, you do not own it, and this realization empowers you to stop reacting to the chaos of the world and start building a legacy that is as durable, as heavy, and as real as the silver in your vault, creating a foundation that allows you to sleep soundly while the storm rages outside, knowing that you have prepared not just for the next quarter, but for the next century.